Well, as you can see, this is Doc from North America. I've got the stock indice up on the screen there. You can see with the big line right there that obviously the news is out. The CPI has come out. Oh, there we go. Hey, George. Let me lower this volume. There we go. And kill that volume. There we are. And let's see what the magic number is. The magic number is, you can see the S&P 500 is all the way up to almost 4170 now. It's just climbing. So the number must have been down, not up. That's what we're looking for. Let's go check it out on some of the websites. Where's my mouse at? I'm going to tell you what the number was. Okay, there it is. We're at 5% versus 5.2. Everybody was looking for 5.2. It came in at 5, and month over month was down a 0.1%. So Congress is doing a good. Hey, Janos. And so Congress here is doing a good job of slowing them down from spending left and right. And that's the answer to it all, really, in the end. It's only government policy at this point that will straighten this out. March CPI was up 0.1%. Expectations were it was going to be up 0.2%. So everything is aiming in the right direction. This is a good thing. You can see the bonds. I got them up on another screen. I'm looking at the 1 month. Let's see. Try to get a little bit better look. It looks like. Let's see if I can hear something there.
And what rate?
No. All right. So, yeah, that's not too bad. Can't complain. Everything's moving in the right direction. You can see the stock indices stalling out in the. I was expecting like up to around anywhere between 4180 and or basically a little bit higher than that actually, around 4190 on the S&P, or as low as I sort of what the options were telling us is that they wanted to move it about 50 points. And it looks like that's what we're getting out of it right now. There's 73. We've gone 30 some odd points so far. The options were predicting somewhere around 50 points. Right around 50 points. So that would put it in the 90s. So probably what will happen is we'll see the markets kind of adjust themselves. And then from there we will see the... maybe they'll make another run at it after the U.S. market opens up, and we'll see how that plays out. And then let's take a look at the bond market. Let's go to the 5-year, solely because the 5-year has been in a daily sell, and the 30-year has been vacillating, going back and forth. There's the 5-year. Yes, the 5-year is starting to challenge the daily buy. It's in a weekly buy. Both of them are. That's the 5-year. There is the 30-year. They're both in weekly buys. And we were already above the zero line today, just by the hair of its chinny chin chin. Same thing there, but we need to get rid of these dots. The green dots and red dots combined together is holding it back from going into the buy. That's why we have a green line up top there. So short-term rates are dropping, and that's a sign of lower inflation. I mean, that's really what it comes down to. All right, let's take a look at the dollar index and see what the dollar index says. There's the dollar index. See, there's some pressure on it there. Let's put it up over on Chicago Quant, see what they're doing with it there. And there it is right there. It's just kind of like unchanged, no real action. We're in a daily buy for 4 days. 5 days. This is the 5th day now. Still in a weekly sell, though. So, this is just flat. I keep on thinking it'll go challenge the, over the next. I don't know what time period to give it. It could happen tomorrow. It can happen in 3 weeks. But it does seem like it wants to go lower. That's the way I feel about it most of the time anyway. I think it's overpriced. So what do you think, George? What do you think, Robin? Anything? Janos? Any opinion? Yeah, prices are not coming. Well, prices will come down on some level. I'm going to take a sip of my tea here again. But overall, once inflation comes in, it sets a new bar for many things. Silver is moving up from the CPI. Let's take a look at that. There it is right there. Acting very strong. Even gold went into a daily buy yesterday again. And the weeklies are holding up really nice here. Both the fast and slow algorithm is above on the weekly, the manifold itself. It's basically saying, I don't care. I'm going up. And we've talked about that. We said it again yesterday. We keep on talking about it. It's like silver's trying to play catch up a little bit. In other words, they discount silver until they see, it's like the classic war movie, Don't fire until you see the whites of their eyes, and it's the same thing with silver. Don't buy silver until you actually see desperation to own metals. And once you see, and I would imagine the desperation is with a gold contract trading over 2,000 an ounce, says that hey, maybe you should be a little bit more long in the metals complex. And who wants to step up and buy gold when you know that the central banks are going to find a way to knock it down? So the second one is, silver is 50% off of its all-time highs, whereas gold is gold is less than 10% off its all-time highs. So it would make sense to step up and buy some silver. Sooner or later, we're going to actually find a silver that never sees $18 again or $20 again. It'll that'll become like a big base, and maybe we'll actually fluctuate around the 30s and then go in the mid 20s and maybe up to higher 30s, over time. And I'm talking about like months and years, not days and weeks. So, let's see. Yana says, what the hell is that? It opened the next candle 9% down. Which one's? Oh, the VIX. Yeah, the VIX has got no. The VIX is in the same club as gold. That's what it comes down to. They're in the same club. The Fed will hold it down. And the only reason you saw active VIX, back in 2020 was the Fed, and I've said this over and over and over again here, and you can go back to the recordings, the videos from the 2000, February and March of 2020, and that is that the Fed was getting rid of those put traders. That's what they did. In other words, put traders were selling puts, just slamming them for 11 years, just selling puts. Selling them. That's all they did is sell them. They made billions of dollars. There were 5 different funds out there selling puts naked. Okay? And when the COVID thing hit, they trapped them. They were forced to cover. I believe 3 out of the 5 went bankrupt. The other 2 closed. And they gave up the billions that they had made. They lost the billions in a matter of 3 weeks. So the only reason the VIX was active at that point was the Fed wanted it to be active. They wanted to put them out of business. And now they had an opportunity to do so, and they did. They took it, as the classic Democrat saying around here is, never let a disaster go to waste. Never let a crisis go to waste. In other words, use it. Do something politically behind it and blame that instead of the machine itself. So, let's see. So why did the VIX initially pop up despite the market going up? Probably just someone just hedging themselves, or it was just a bad tick, fat finger maybe. Oh wait, what the hell is that? It opened the next candle 9% down. Yeah, there you go. That's all it is. By the pop-up, I meant the notification data on the platform. We try to send it ASAP for important events. Doc says, I mean, George says I'm Doc. That's right. Wait a minute. Am I Doc or am I George? Oh, that's right. I'm Doc. George says, I shouldn't take the weekly until the end of the week, correct? Unless, confirmed at the close of the market. Tell me the product you're looking at, and I'll show you how to read it. Which product are you looking at? Let me think. I think, was copper in a weekly sell? Are you looking at copper? Let's see. Yeah, like copper. It's trying to go into the week. Now, if the fast-moving algorithm is in the plus and the slow green is above the manifold, you can get long at that point. But as long as it's trapped just above the zero line and not above the manifold, no. You wait to the end of the week to confirm. Unless you're trading options, then you can start to put option spreads on because your risk is very low. And so then you can put binaries on things like that. So if that's what you're talking about, silver. Well, silver is in a weekly buy. Where's silver at? Yeah, silver is in a weekly buy now from, where's it at? From back in here, back in the middle of March. So, and both of them been above the manifold, showing that strength. Now, when the fast starts to drop underneath, it tells us there's some weakness coming in. So you could see it slowed down, went sideways in here, but it didn't go beyond the manifold. So there's a lot of strength in there, and that's how you read that. Right, exactly. Oh, that feels good. All right, now, okay. So I'll tell you if it's Wednesday, like today's Wednesday. Let's look at copper for a second. If the slow green was above the manifold, the odds are 99% that it will close in a weekly buy. So it doesn't matter if it's Monday or Tuesday or Wednesday or Thursday. Once the slow gets above the manifold, it never falls back. It's so rare. It's like over 99%. Yeah, it's interesting stuff. And we've been playing with the fast now. I've given you that story about I created it in 2016, 15, 16, something like that. Tried to understand it more in 2017, 18. Couldn't figure it out what it was trying to tell me. Watched it for another couple years. Now I've got it under control. I understand the fast and the slow and the relationship between the two. And that's why we have a blue dotted line. We'll probably write some rules for it over time. We're working on some stuff right now to try to go live. So we're just on hold for the moment on trying to write new rules to understand the fast-moving algorithm. Crude. Crude oil. Look at crude oil. And then we'll go take a look at the currencies. I imagine the currencies are all going to be running against the dollar pretty well. There's crude oil up in the 82 area. You can see the weekly is having no problem. And look at that. There you go. Here's a good example. The slow algorithm now is at 82. And you can see that the manifold is at 81. If that thing closes there tonight, it's it. It's in a weekly buy. The odds of it going out of that weekly buy are like almost nothing. It's under 1%. So, and when you're in daily buys and that, you can catch the strength a little bit more. Let's see. The manifold has been a very interesting product. What it is the manifold is taking my formula and smoothing it with a standard deviation, like the way they do in Bollinger Bands. So that's what I do is I use a 1% standard deviation. I have some that actually have a 1% and a 2% standard deviation. I played with both. It's interesting. It's totally interesting the way it works. And then I have some that match up that are smooth by stochastic. The green and the blue and the white are smoothed by stochastic mathematics, and so that's why stochastics, like you see on J4X here. You see how this. Let's see, what is this? This is the. Let's go back to the dollar index, since we have the dollar index on J4X. No, not there. Right there. Right there. So there's the dollar index right there. And that's why the stochastic, when you're looking at the stochastic, it has a tendency to look like it turns down. See, it's turning down right there on the daily. We're turning down. It bottomed out back here about 5-6 bars ago. Ours bottomed out about 5 or 6 bars back. There's 5 bars right. That's 6 bars right there. That's why they match up a lot. And so then what we do is we run a fast stochastic against a slow stochastic, and all the only difference is that not only there's a little more difference, of course, but it can be 3 or 4 hours behind. That's all. But when you're looking at a daily chart, that's not bad. But it has a correlation of about 75% of the time, 80%, something like that. Sometimes it gets as low as 68, 67%. But it's a good tool, and that's why we have it up on J4X. It's a better tool than looking at a MACD or an RSI or moving average or things like that. Okay, never realized that the manifold number is on the chart. I see it in yellow. Yep, after you pointed it out. Now on crude, yes, exactly. And you can see the size is a little bit small here. 08 and minus 08. It's just mirror images of itself, but they're standard deviations. Yeah, interesting stuff. Fun times. Let's take a look at the euro. And George, if you care to see anything, just shout it out. We'll put it up on the screen. Let's see. Let's go to the euro. And there's the euro. You can see euro. Looks like the euro is moving up. What is that? Yeah, you see the euro is up to 109.49. It's moving up. You can see that strength in it today. That's what we figured was going to go on. Again, we're not dollar bears as much as we just think it's way overvalued. That's all. That's what it really comes down to. Is we just see the dollar is just way overvalued. And there's the euro right there. You see the euro perking up. It's going to be looks like it's going to close in the buy. It's been in the weekly buy for weeks here now, and doesn't seem to want to let go either. There's a constant warning sign with these two lines, the green and the slow and the fast algorithm just refuses to let go. And that's why I keep on looking at it and going, it wants to go down, and that's sure enough, it finds a way to go down. And that's what's so good about our webinars. We're trying to give daily and weekly traders a good trend. So in other words, if you're using binaries or options, and you see our math and the trend, you put a bear spread on when it's going down, and you put a bull spread on when it's going up. If you're hedging inventory, cattle, oil, metals, whatever you're hedging, in the end result is that just gives you a doorway to have that general trend where you hold off and don't sell. In other words, how many times have producers sold too early because of just a squiggle here or there of something? The blue algo line on the weekly to me is like a faster. That's what it is. It's a faster moving algorithm, which is signaling to me be aware of the weekly may be coming into a buy. Exactly. That's exactly it. That's how we're starting to view that. We're writing the rules to it in essence, and it takes a long time for me to want to invest money on anything. I can go years. Hell, I've been playing with this particular indicator for 6 years before notice the last 6 months I'm talking about it now. I've been working on it for 5 years. I'm not willing to commit money to just a whim. It has to be solid. Remember, we're not here to trade. We're here to make money. That's what we're here for. We're not here to trade. Trade, anybody can trade. and go out and trade. I don't know if they're going to make money at it, but anybody can push a button and make a trade. But to trade and make money at the same time, that's the name of the game as far as I'm concerned. The idea is to make money. Okay, March core CPI year over year is 5.6 versus the 5.6. Okay, so basically it's stalled. That's what remember yesterday I was saying they think it's going to be sticky, the core. So everybody, everything seemed to show that we were going to have a half decent little number today. But remember I was saying to you yesterday, the core is going to be sticky. And that's it, or firm. And there it is. The March CPI core came out 5.6, and is that's what the last month was, 5.6. It's not moving, but the shorter term, year over year, is moving, and that's because of the Congress not calming things down. So let's see. Okay, let's see what else is going on. Let's see how the stock market's doing. Stock market stalled out in the 70s, 77. Like I said, the options were kind of predicting like 92. So I think that'll come after the U.S. Open in basically 39 minutes, 38 minutes, something like that. All right, now what do we got going on here? From the euro, and there it is there, the British pound, which wasn't far off the hunt yesterday. And at one point was playing with the daily buy, is doing it again today and going up after the highs. Again, this thing also looking very firm. Let's put it up over on J4X. There we are. Yeah, you can see the fast is trying to turn up now on the daily, just like the slow here is moving up. And so that's the strength that we see trying to turn up in this marketplace. Well, they don't paint a pretty picture. I can tell you, I got the news on, and they're just, the news that I trust, and they're really just, just disturbed by the way the president has been running the country. Well, we'll see what happens. All right, from there we go over to the Swiss. I'd imagine that Swiss is making a little bit more low. Yep, there it is. We keep on looking at that thing to break that 90. It's going to be tough. Oh, yeah, there it is. It is broken to 90 finally. What do we got? We got Swiss trading at 89.76. Exactly. Yeah, we thought we'd see that. We think that this is, maybe the high 80s, probably stall out in that area. You can see the fast stochastics already is warning us that it's breaking down again, which is a good thing because this means it's gaining against the dollar. And then we look at it over here, right there. There's the Swiss there. Same situation towards its lows. The weekly's been in a long drag out. It goes in and out a little bit. Let's move that line down, the zero line there. It has gone up. Now, how did I do that? Let's try this again, like that. There we go, and then we'll widen it out again. So you can see here, the Swiss is telling us, don't worry, be happy. It went into the weekly sell up in here on this last plateau high, and the fast stayed there, and barely got through the manifold and dropped back down again after a few days. So, the pressure has been on this thing, and then here it jumped through from that big spike, and then it smoothed out and was back in and that there, I guess it was like on the Thursday or something like that, because that was the 24th was a Friday. Yeah. So that's been showing the pressure since. So we can see that it's down, down, and down. And we closed in a daily sell there yesterday also at the same time. I was a little surprised that the yen didn't get into the sell. Maybe today it will. We'll see that in a few seconds. Let me just save that like that. All right. Now from there, we jump over to the yen. Let's see what the yen is doing. And there it is right there. Trying to break down, but kind of just more firm than anything. The weekly is becoming a little bit more intense. We've got the fast jumping through the manifold, but the slow is still stalled. So we're just watching that at this point. It says that there's some buying still going on, or in this case here, what it is, it's buying dollars, and they're selling yen. Yen is one of the only countries now that still has some minus interest rates, all the way up to 1 year or 2 year, I think it is. Tell you in a second. Good. Didn't mean to do that. Go back. Let's see, where's it at? There it is, Japan. Okay, so basically the 3 month is a minus, the 2 year is a minus, and the 3 year is a minus. They're not paying interest on any one of them for all the way out to 3 years, and that's probably part of the problem why the currency is, they've devalued the yen by doing that. That's what happens when you don't pay interest. You're devaluing your currency. And unfortunately, now that we're not hearing that, we used to get a quarterly report when Mr. Trump was in office. That quarterly report is hidden now. They don't tell us what's going on with the currency pairs and what they referred to as manipulation. Whereas under Trump, every quarter they would put out a statement about who was playing the right way with their currency and who was not. So you still see that the bond market is doing it. It's coming down. Let's see if I can show you U.S. markets. Let's see. There it is, bonds. And there's the U.S. market. So you can see here all red. So that means that the interest rate is going down. And so only the 3 month is at 5%. The 4 month is at 5%. But they've dropped the 6 month and the 1 year back underneath. So that means that they're probably looking for, let's put it this way, 4 month. They think that by, what's 4 months from now? August, right? So they're thinking by August the Fed will be done raising rates. That's what that's trying to tell us. I don't think they're cutting rates. I just think that they're going to stop raising rates. I think that's how it's going to play out. And then we'll sit there for a little while, watch the economy. The long as the House of Representatives slows down all this spending and throwing money away and doesn't raise taxes, then you're going to see inflation come back down again. That's the only thing that really rules inflation. Tea time. There we go. So from there, we'll take a look at. I fixed the Turkish lira. You can see right there. Let's push it back one more, like that. There you go. Turkish lira. All the money that was coming in for the disaster probably is done and over with at this point. And as you can see here, the weekly is fine, firm, steady. Not willing to let go. We've gone from the 20s or low mid 20s to the mid 20 or low 21s now. And it seems like their total mission has been for the last 10 years is to devalue their currency, which is a strategy to try to increase activity, industrial or economic activity in your country, but not at this rate. When you go from 1 to 20, that's flat out disaster. Now from there we'll go look at CAD. CAD is pushing down, and obviously we've already looked at oil. Oil is moving up. It's in the 82 area, 83 area. As you can see here, the weekly is pressing down. Excuse me. Let me sip again. Get a little frog in the throat sometimes. I get so excited. I love talking about the markets. All right, and from there, where we go again? So the CAD. So let's do this on. So here's the CAD. You see it moving down. Same, right there. Same pressure, whole bit. And then over here, let's put oil into J4X. There's oil right there. You can see it's moving up. That pressure is on the upside. It's just a little underneath 82 at the moment. Over here, you can see the same situation. Trading just underneath the 82 area now with a high today of 82.48. So it was about 60 cents higher. You can see, the weekly is pushing up and trying to touch. It's at 72, and the manifold's at 81. So it's just, just fighting. It needs to, hold this strength throughout the day and try to close a little bit higher to put a scare into the upside of this market. What else can we say about that? So that's Canadian, and we'll put Canadian now up on J4X. Right there. Right there. It's moving down, oil moving up. Right there. All right, now we'll go over to the gold market, and we'll put the South African Rand in right. Where's it? Let's do this. We'll go like this with gold. We'll put gold in real quick like that, and then go to South African Rand. And there is the South African Rand right there. You see it is down from yesterday. Not a lot. Again, we have a lot of politics chewing things up down there. And you can see yesterday it was down from the day before. But it's in that daily buy now. It's still a daily buy. All right, we'll make a daily buy. It's been in a daily buy since right there. There we go. Bing, bing, bing. There we go. So it's been in a daily buy since here. And gold has been going sideways from that. When we look at gold right here, you see it's been, down, doing the right thing, and then up again. So with gold moving up from 2000 to almost 2050, we should see the South African Rand at this point, if it wasn't for all the bad politics down there going on right now, we should see it below the 18. Matter of fact, with it this high, if it wasn't for all that politics down there, it would probably be trading at like 1470, 1480, something like that, 1450. So there's literally almost a 4-handle cushion in there, because that's what the political problems down there are really shaking things up. You can see here, I heard someone refer to it as banking problems, but yeah, that's the president of South Africa doesn't like banks, and I guess he keeps millions of dollars in his office, and underneath underneath the sofa, and underneath the chairs in his office, he's parking money. So that's what the problem is down there: too much politics and not enough commerce, and that's what we have going on right here. And when we obviously, like I said, we take a look at gold itself, it should be going with the way this thing's been moving up. Gold should be down, and it is not down. It's threatening the the upside totally. We have a little pressure here, but nah, we're not really seeing much weakness at all when it comes to gold. Last 2 days have been up, not down. And we just had a couple down days here, pushed it into a sell, and we're right back in the saddle again. That's what happens when you have a trader from cattle country. All we do is talk cowboy stuff. Matter of fact, we're going to have a cowboy barbecue in about, maybe I'll take a picture for you. We're going to have a cowboy barbecue, I think, on June 9th. I think that's what it is. June 9th. Cowboy barbecue. All right. What do we do now? We go from there. We look at the last currency of all, and that is the Mexican peso. That little song I ding once in a while, I say, is from a John Wayne movie where he's down in Mexico. All right, and there it is right there. You can see it's parked itself back down before the threat of going into Brexit, or not Brexit, what do you call it? BRICS. They announced that they might go into the BRICS, and they did this to the poor thing. Over a 3 or 4 day period, they just jammed it. I guess they don't like the idea of joining the BRICS. You know, Mexican peso would be the strongest currency in the BRICS if they joined the BRICS. And then probably the South African rand would be the second strongest currency, and then the third would probably be the Indian rupee, and then the other three, you know, the Brazil real, the Chinese yuan, and the currency that will not be named, they would be like penny stocks in currency trading terms. They'd be really horrible. The real, you can't get a bid or offer. The Chinese yuan trades less than 3% a day. Than the rest of the, out of the whole world currencies, it only trades less than 3% a day. And then the currency that shall not be named is up in the 70s and 80s, and everybody wants to lock up their president. So, the Mexican peso, as much as they have the drug cartels down there and the problems, would be the strongest currency in the BRICS. Be the most productive. They're 5 million barrel a day production of oil. Auto factories, the whole bit. It's very productive, definitely. Agriculture sold to the U.S. A lot of positives there. So it would be the strongest currency right there. This would be the brick. It would be like watching, when you look at the Euro index. I say this, not the Euro index, the dollar index. It would be the euro of the brick index. The Chinese Mexican peso would be the euro. It would probably be over 50% of the index. And the last three would be less than 4% probably of the whole index. The real, the yuan, and the I could see them making the Chinese yuan 2 or 3% of the index. That's about it. And the one that not be named, probably 1 or 2%. And I don't even know how you would put the real in there. The real would be so bad, it would be like the old days with the dollar index, where the sixth one would not even move. Yeah. All right. So from there, we move away from the currencies unless somebody wants to see something. Oh, let's see. Bulls inflation went down. Let's see. Okay, here we go. We got now the bulls and the bears fighting with new arguments. Bulls inflation went down. Bears core inflation continues to grow. That's what I talked about yesterday too. Yeah, I expected that. I meant bulls inflation growth pace decreased. Yeah, well, it doesn't matter how you try to describe it. There's a bull and a bear on this whole thing right now, and that is that the bears of the stock market are going to say the core is stingy. That's what they called it, stingy. In other words, it's not going to move. And and obviously the bulls on the stock market, not the bears of the stock market, which are looking at the stinginess, are going to be looking at month over month and basic year over year. And they're saying, hey, look at this, inflation rates are dropping. We're on the right path. Now the question is, to get from 5.2 or 5 even, to get down to 2 is going to be a Herculean effort. It's not going to happen so quickly. Maybe, a year and a half. If let's say it dropped the same amount every month now for the next 10 months, that would bring it down to 3. But it would have to drop like this every month, the same, drop. I think that's a really hard thing to expect, But, we've talked about this before. The markets are a forward-looking product, a tool. They anticipate. That's how they usually work. It's definitely an anticipation thing going on there. All right. So from there, we'll go over to the. I guess we'll finish off the metals complex. Let's go look at the metals complex. Oh, let's do this too. Let's take a quick look at the stock market. There's the stock market. And you can see we're trading at 159. Doc was predicting we'd see about 192 on the positive side. And in other words, I was selling strangles. So like I'm short from the 4200 area for the next 3 days. Well, no, it's already making money, but I can take it off. And then at the same time, I'm short the the 360s? Yeah, short the 360. I'm sorry, yeah, 4,660. So I'm short there, and I was short the 5. So didn't think they could get to those numbers. It'd have to be a really good number, and I knew that the core was going to be stingy. So in other words, because the people who were telling me that the others were going to be what they are is true, and they're usually right. They do all the numbers, they do all the statistics. Like I know, Janos, that a lot of this is really fundamentals. So it's not that hard to predict what the number is going to be. It can be pretty close. This is one of the easiest numbers to predict. CPI and PPI pretty much the same way. They're pretty much easy to, especially CPI, because it has labor, and it has things like that in it, and interest rates, stock market, and has all these these things that we can measure every day. So I trusted where I draw the information from. So. All right, let's see. Where do we go from here? We go over back to the metals complex right there. And so you can see gold coming off a little bit of the action, but still doing all right. We see silver doing the same thing. There's silver doing the same thing. And let's put silver up on J4X right there. All firmness. It's showing some internal weakness here when we see the fast stochastic moving down below the slow stochastic, and it will try to turn. In our case here, that's what's the difference. That's another difference too, unfortunately, is that ours it does the same action, but it's not telling us to run. It's telling us to still be bullish in here, and that's what the green Hinky-Ashki bars tell us. Don't take that selling too serious until we turn red. And that's how that works. Yeah, you were right. I understand where you're coming from. You don't have to be perfect for me. I understand exactly what you're thinking because I've talked to you for so long, and you're a trained analyst. You make sense. So in other words, it's the bulls and the bears, the battle. That's what it comes down to. The bulls and the bears. All right. From there, we'll go over and look at copper again. Like I say, these are the eyes of China when I look at copper. You can see they're trying to lift it up. It went into the buy here, but it's really having its issues today still. The weekly is trying to turn up. Would be nice if it would break through that manifold part, but that's going to put it into a weekly buy no matter what, as long as it closes there. And that is pretty much the copper. Let's just save that. And then we slide over to the platinum. See what the platinum is up to. Here's July platinum. Trying to get back into that buy again. Look at that. And you can see the weekly has been not too bad. It's been hugging for weeks the manifold, and the fast has moved above it, and they're all joining in, and they're happy, and yay, and all that stuff. All right, that completes the what's it complete? It completes the metals complex. Let's go over and look at the energy complex. And there's the front month oil, and we're going to put we'll put Brent up on J4X there. There's Brent. You see the same thing, showing strength there. You can see that little bounce going on. What's curious, we see the contango. We're back up over 82 again, and let's see what the July contract, the back 3-month contract, is showing us 81.69, so it's discounted by about 45 cents. And you can see we're in daily buys in both, and the weeklies are looking very firm. You can see that's 78, and the manifold is on 77, so it's trying to lock itself in today to tell us that they're going to be firm the rest of the week. Then we go over to nat gas right there, and you can see this. Let me just put the quick look at light crude there. There's light crude. It's doing that 82 thing, the front month. And then you can see here the last couple of days we've been in a buy on the natural gas. We've moved up from the $2 area to $2.18. Bet you wish you had moves like that from like $25 to $25.10, not $26. And in this case here, the last I saw it was up in the 28s. From there, we'll throw on nat gas right there. There's U.S. nat gas trading at 218.6 with a 218.1 bid. So that's not 21. That's not like $2.80. That's $2.18. That's how tight the nice market is. And so then from there, unfortunately, the weekly just has its issues. We got the fast moving. You can see right there. It's doing its best to get through the zero line, but not quite yet. Just brawling its way through. It's a fight. And then we go over and we look at the energy company down in Spain. Janos knows that's my favorite stock in Europa. It's the only one that gives us an insight of what's going on in Europa when it comes to nat gas. And let's see if we can find it. There it is right there. Now, it's been locked up in the 28s for a while now, and I'm really disappointed. Please give us 27. All right, so we're at the mid 28s now instead of the high 28s. And that's we need that. We need that pressure, We need to see some type of breakdown in there for Europe to get a breath of fresh air. Wouldn't it be nice if they brought it down into the teens over the summer? Give everybody a chance to use natural gas a little bit more relaxed at 30% lower. I'm just hoping that it happens. All right. That completes the energies. Now what we'll do is we'll go take a look at the stock indices, and then we'll get out of here. And there is, we're still stuck at that 59.60 area on the S&P. I really do think they're going to try to pop it one more time. I should look at my spread. But, I'm fine. It's a spread. It's binary, so I don't have to worry. All right, now from there, we'll go to the S&Ps themselves, the daily and the weekly, and you can see there firm, and then a weekly buy for a few weeks now. This is going on a third full week. Through the manifold. Yeah, see how it went? Here you go, George. There's a good point. On the 30th, it went through the manifold, closed above the manifold. So you can see there, right there. And by doing so, the next day it even exploded even more. It made it just about, it gave us like 50% of the move of the 3 days right there on that one day. The next day was the same way. And what else can we say about that? I guess that's about it. Oh! Ooh! I got something for you. We're going to skip the Tech 100 for a few minutes, and we're going to go over and look at the Russell 2000. It closed in a daily buy yesterday. I put a bull spread on. There it is. 2 days ago now. This is the second day. It closed in a daily buy, and I was warned with that. Yeah, Robin, the IWM. I forgot all about that. It was late in the day I did it. And so it looks like it's moving nice now. And it's playing with the weekly. The fast has been above for the last couple weeks. Now the slow is joining in. That would be a sign that there's buyers. Be interesting to see if they can get it into the weekly buy. That will be something. Yeah, it did. Did the same thing. Gave that warning. That's what's good about that. So if you're a producer, you know that the overall trend is already turning. And you can try to, in other words, some producers go and sell futures contracts against their product. Some producers, sell a lot of their inventory. Instead, you sell less of your inventory, or you sell it as you literally buy a put spread, so that you don't limit your upside move. Just buy a put spread, and imagine if you have a limited amount of risk there, and you can sweeten your gains if there was a problem. But you don't give away. After all the risk you take, not you in particular, but out of all the risk, when I'm growing stuff, I'm taking a risk that like this year everything is growing. But I mean, it looks beautiful. It's taller than normal, the whole bit. It's ahead of schedule. And so, you're taking that risk. Why sell the futures contract and sell it? Instead, just hedge it. And that's what the blue line helps you to do. Just hedge it. Let's see, what product is this? This is the Russell 2000. If this is the most speculative of our stock indices. If this thing gets going and gets into a weekly buy, which it looks like it might do, and they take it up, it might get up into the 19s. That's very positive. That'll put energy. Let's put it this way: money. I heard one of the Chicago traders that I know from years past said on Monday. He said, "Oh man, I see the Russell looking better today for a change." And I went and looked at it on Monday and thought, "Ooh, look at that, red and green. If it wasn't red and green, it would have been in a buy." And then I started watching it yesterday, and then forgot about it. And then at the end of the day, I did a bull spread, and then today it's coming through. I think it's a bull spread process. I think it's a binary game. All right, where do we go from here? Now we'll go to the Tech 100. Now that's very interest sensitive, so it should be up at the moment. Yep, look at it. It's up. And you can see the weekly is happy. Fast had been dropping down to the manifold, but we'll see how well it turns around and bounces back up again. And that, the Fast was showing you the pressure on it over the last 6 days. And then we even went into a sell right there, and it was in, out, in, out, in, out, making new lows each day, but closing higher. Literally the last hour of the day, they found a way to get these things plus. It was amazing. All right, let's see. Where do we go from here? We go to the granddaddy of them all, the Dow Jones Industrial Average. Right, where are you? I know you're right there somewhere. Right there you are. And there's the Dow. And see that pressure on the upside in a weekly buy, looking fine. It's been in a daily buy since here. It wouldn't even fall into the sell. It gave us a red and a green here for this. So it wasn't even able to fall into the sell there. And that is amazing. Hello. So that is the action right there. The Dow has been telling us, be long or be wrong. That's what it's been saying to us. All right. So now from there we're going to drift over to the intraday S&P, and we'll just talk about what we're doing here with the S&P. What we've done is we've made the fast and the slow join together. When they're both on the same side, it goes down. When they're both on the same side, on the upside, they go up. On the same side, on the down, notice that like the fast went under and then it finally pushes it into the sell. You can see where there's times where the fast goes into a sell, but the slow does not, and it still carries up. And like an example here would be is that it didn't get into the buy really until right there, and then it went into then the next candle was up, and then it went into a sell right there, and then that's the pressure. That's a short term. This is a 1.6 Tesla. That's what this is. Now over here, we're looking at I think it's one of those classic Tesla counts of. I'm trying to think what it is now. I think it's 0.38 times multiplied 38 times instead of 0.38. It's 38 times, and it's an 18,000 and change bar. And you can see same thing here. It goes into the cell right there, and in this case here, it didn't. Well, both the fast and the slow went into the cell there. And sometimes it'll keep you from getting head faked. Goes into the buy here, and misses it right there on the sell, so it doesn't go into a sell. It goes into the buy right here. It doesn't go into a sell until right there, because it flirted with it. In this case here, that one right there was a plus. The white line was a plus. So, and the fast was below the line. And then that one, the same way again. Oh, maybe not. Let's see. Yes, it goes into, it's a minus. So it goes into the sell there and goes right back into the buy right there. But at that time in the morning, I don't pay attention to it. Because it's like that all the time. At the end of the Asian hours, it's very sloppy and almost illiquid. So then I start paying attention to it in here when we start looking at European hours and the whole bit. And so there's your action. Now in this case here, you can see the slow was at 30 and the fast was minus 75. It wouldn't go into the sell. It would not go into the sell. And then it gave us that big spike there. All right. Traders, we're out of here. Happy hump day to you. So this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. Thank you for the conversation, traders. I appreciate it. I love conversation. It's like the cyber pit. Ta-ta for now.